another eye-melting rally in gold. I suppose we could call it face melting. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. Really, it's quite something. We broke on CNBC this morning. Just a few minutes ago, we were at $3,502 per ounce on the futures market. Of course, CNBC puts the futures price on their homepage there, but nevertheless, I mean, what a move. And it's been a big move in the gold stocks too. I was looking, maybe somewhere to hide out in a stormy stock market, and it's quite interesting. I mean, when you consider what the S&P has done this year, let's actually just look here. The S&P year-to-date is down 12.3%, so let's call it 12%, whereas year-to-date, gold is up 30%. GDX, the Van Eck Gold Miners ETF, is up 52%. And the Van Eck Junior Gold Miners ETF, GDXJ, is up 52% as well, year to date. Quite interesting. Could you imagine, rotating all of your funds at the end of the year into gold, how that would have performed? So investors looking for a place to park their money. I mean, there's a lot of rich people out there. As they say, if you own a house, you're basically a millionaire these days. I mean, at least in some parts of the world. So there's a lot of money out there. And when you start getting, real market turbulence and this, falling dollar, rising U.S. Treasury yields, and a gold price that is on fire, and trade wars, countries being annoyed with the U.S. and central banks trying to figure out where to diversify, everything you could argue was going in the United States' favor. The money was going to the stock market. The dollar was the safe haven, as well as treasuries. And that is being called into question and adding fuel to this fire. We touched on it last episode, how China, in the first 11 days of April, bought more gold than the first 3 months of the year. So again, it's tempting to see this as a structural shift. We have a couple of news stories here relating to this. Here's Bloomberg News. Gold trading frenzy erupts in China as tensions with U.S. escalate. This is Bloomberg News via mining.com. China saw an explosive surge in gold trading last week as the metal hit successive records and Sino-U.S. trade tensions rose. The Shanghai Futures Exchange saw trading volumes of the precious metal hit the highest level in a year last week. That was thanks to investors and industry players, refiners, traders, and retailers that have ramped up hedging activities as global markets gyrate in response to trade policy changes in the U.S. and China. Demand for gold is strengthening, with investors seeking safety as a new trade war unfolds between the world's top two economies. The precious metal could reach $4,000 an ounce next year, about 25% above current levels, amid a wave of purchasing by central banks and recession risks, according to Goldman Sachs Group. I thought they had just raised it to $3,700 like a week ago. Maybe it was 2 weeks ago. Now it's $4,000. So I do wonder to myself the credibility of these predictions if every week you're changing the outcome. I suppose they have to. It's probably part of their ongoing work is if the target changes, and if that means we change it from last week because circumstances changed, so be it. And so I assume that's what's happening there. The buying frenzy in China has seen prices move to a premium of around $20 an ounce over international prices, reversing a discount it saw for the majority of the past year when domestic demand was weak, according to Bloomberg calculations. So there is a premium that is growing in China, again, fueling this notion that China is one of the big contributors to this rise in price. And it stands to reason. I mean, gold bugs have long speculated that China was diversifying out of U.S. government bonds to gold, but now it seems like they have a bit more, shall we say, motivation. As long as they had the huge trade deficit, it kind of made sense to keep the U.S. happy by buying some of their bonds. But now that that seems to be, at least for the time being, ending, what is the motivation to keep the U.S. happy? If anything, it's the opposite. With the spat going on, one would think they would want to use this as a leverage point and say, you know what? We're not buying any of it. And maybe we'll buy a bunch of gold instead, because what are you going to do with your money? There's a lot of money out there. What are you going to do with it? I mean, it was quite interesting. Bitcoin caught a bid. Some people were saying this is the first time where we see, Bitcoin really perform as a risk-off trade. I would argue we did see that once before. And that was during the Silicon Valley Bank crisis of, was that a year and a half ago, 2 years now? Where we did see Bitcoin trade up during a banking crisis. I would argue it's not the first time, but it is remarkable nonetheless, because most strategists argue that basically Bitcoin is a leading indicator of risk and the stock market. But it stands to reason. I mean, I'm sure a lot of this audience have considered it themselves. Like, what do I do to protect my money? And all of a sudden, if bonds and stocks and the currency are facing issues, all of a sudden you're looking for, alternative investments. Enter gold, enter Bitcoin. So it's quite interesting. Another theory I have on that is perhaps it's not risk off, and perhaps it's just people who have made a lot of money in gold. We've seen gold do very well this year, maybe rotating over to Bitcoin, perhaps. Let's just continue a little bit more here. We have a quote from Aaron Chan, gold strategist at State Street Global Advisors. Quote, such a multi-layered demand base helps support and stabilize gold prices even amid external volatility. The demand is less speculative and more strategic or culturally embedded, which means it is stickier and more resilient. End quote. Interesting thought. And the article continues, much of the onshore strength comes from the demand for investment bars, inflows to ETFs, and banks' gold accumulation plans. An investment product that allows retail investors to accumulate gold on a regular basis, said Ziji Wu, a Shenzhen-based analyst at Jinri Futures. Quote, investors continue to favor gold as a safe haven asset and long-term portfolio diversifier as domestic bonds and equities come under pressure. End quote, Wu said. He continues, I expect investment and hedging demand in China to remain resilient, end quote, as policy flip-flops in the U.S. create more uncertainty, he added. And we have a story on the Chinese banks that are being given higher quotas by the government to allocate to gold. We're going to see that in a second. And we also have a quote from Vasu Menon, Managing Director of Investment Strategy at Overseas Chinese Banking Corporation. Quote, China may be encouraged to continue moving forward more actively to diversify its reserves away from the U.S. dollar and treasuries, given that it is at the epicenter of the trade war. End quote. The desire to reduce exposure to the U.S. may see China, quote, buying more gold to bolster its reserve, end quote, Menon said. Now, continuing on to this other story, China offers banks extra gold import quotas as investors flock. This is Bloomberg News via mining.com. The People's Bank of China has allocated fresh gold import quotas for some commercial banks, people familiar with the matter said, as Beijing responds to strong haven demand from institutional and retail investors in the face of an escalating trade war. Now, the only concern here is gold's now at a big record. It has really taken off. As an investor, you kind of want to buy low and sell high. So I'm still kind of waiting for this pullback here. Let's see. I mean, there could be a structural change here, where if all of a sudden China starts buying gold to diversify from treasuries, like where does this end up? And, you can take your technical analysis and throw it out the window at that point. So let's continue. The central bank typically limits the amount of physical bullion coming into the world's top consuming market. The additional quotas were allocated last week to meet significantly increased appetite, the people said. They asked not to be named as the decision is not public. And again, we're seeing the stock market. It was down, I think, 900 points yesterday, 1,000 points on Monday. And are we seeing what Jeffrey Christian was mentioning basically in the last two interviews, which is investors have done very well in the U.S. stock market, and we're starting to see diversification, a reallocation, so to speak, to gold and a rebalancing really of the portfolio. And we have all of these Mag 7, $1 trillion stocks. What happens, when you get just a small sliver going into the gold market? It looks like the Chinese here are increasing their gold purchases, whether it's retail, commercial, or even governmental. So it continues to be dramatic here. Speaking of which, Barrick Gold. And it was about a year ago that we first started getting reports of Barrick and Mali in the Africa report. And there was this kind of rumor-esque article. There was discussion. There were reports that Wagner was looking to take over Mali's Loulo-Gounkoto complex. And what that turned out to be was the beginning of a dispute between the government of Mali and Barrick. In a sense, you could say directionally true, those initial reports, although content-wise, Wagner, at least as far as we know, doesn't seem to be directly involved, and a lot has happened with Wagner in that time as well. Although analysts have said that part of the reason this is happening is because the government of Mali needs to pay Wagner for the protection that they're asking to be provided there. So let's see what Barrick has to say. They put out a news release last week. Barrick calls for responsible leadership as Mali situation escalates. I don't know who wrote this headline for Barrick, but calling for responsible leadership, I don't see this rubbing well with the Mali authorities. In fact, we have an article from the Financial Times. Mali threatens to seize Barrick Gold's assets. Let's see what the press release says. Barrick Gold Corporation confirms that it has continued to engage in good faith with the government of Mali to finalize an agreement that was fully negotiated and accepted by the Ministry of Finance in February 2025. From the outset of its engagement, Barrick has worked to find a constructive solution. You know what I'm realizing here as I read this? Of course, the government has seized a whole bunch of gold, and all of a sudden that gold is worth a whole lot more money in the last 2 months, isn't it? After this big run-up. That might be part of the issue as to why these negotiations have stalled. Let's continue. In October 2024, Barrick agreed to a framework aimed at achieving a comprehensive resolution of all outstanding disputes and paid $85 million as part of the ongoing negotiations. Despite this, the government subsequently took a series of escalatory actions, including the arrest of Barrick employees who remain unfairly in detention and the suspension of gold shipments. So these employees that were arrested, I believe it was late October, early November, are still in detention. It continues. More recently, although Barrick signed the agreement presented by the government as requested in February, and we heard reports about that, which sounded like they were coming to a deal, the government has failed to execute it. Its conclusions now appear to be obstructed by a small group of individuals placing personal or political interests above the long-term interests of Mali and its people. So we're back to fighting words here between Barrick and Mali. This week, departments within the government escalated matters by closing Barrick's Bamako office and threatening to place the Loulo-Gounkoto mine under provisional administration unless the mine was reopened and tax payments were made, even though gold exports remain blocked. It is regrettable that the government continues to obstruct gold exports while simultaneously demanding tax payments on revenue it is actively prevented from being realized. So they're saying you guys want taxes on gold that you've seized. Barrick remains ready to honor the agreement envisioned by both partners and stands prepared to immediately restart production. This would unlock substantial revenue for the country, including tax and royalty flows that form a very significant part of the national budget. This would also see the dropping of unfounded criminal charges against its employees and their release from detention. The consequences of the government's continued inaction are serious both from an economic and a human angle. The long-term viability of one of Mali's most strategic mining assets and a key contributor to the national economy is at risk. Barrick brings the unique expertise required to successfully operate this world-class mine. In addition, 4 innocent Malian citizens continue to be deprived of their freedom without any justification nor prospect for a quick solution. Barrick has long been a committed partner to the people of Mali and a reliable corporate citizen consistently supporting local content and economic development even in times of uncertainty. As private banks face mounting pressures to keep the country afloat, Barrick has continued to meet its obligations in good faith, paying wages, sustaining workers, and contractors' livelihoods as well as the broader supply chain. However, this situation is not sustainable for the long term. While Barrick continues to seek a constructive solution, it remains prepared to pursue international arbitration and legal remedies against the government and any individuals or entities acting in bad faith. Barrick urges the government of Mali to act now in the interest of its people and the national economy by concluding the agreement which stands ready to be implemented. So Barrick running out of patience and continuing on the African continent. Interesting story in Bloomberg regarding the Congo. U.S. makes progress on minerals deal with Congo, advisor says. This is Simon Marks at Bloomberg News. The U.S. may provide financing to companies operating in the Democratic Republic of Congo through the Export-Import Bank of the United States and the U.S. International Development Finance Corporation as part of a potential critical minerals partnership, a senior U.S. official said. The financial institutions would support investment in the so-called Libido Corridor, a major rail infrastructure initiative linking Congo, Zambia, and Angola to the Atlantic Ocean through a port in Angola that the DFC has already committed funding to, Masad Boulos, senior advisor for Africa at the U.S. State Department, said in an online briefing on Thursday. Quote, the project has progressed considerably, especially on the Angolan side. We are now discussing with the Congolese and Tshisekedi's administration to work on the Congolese side with regards to railways, highways, but also power projects, including dams and hydroelectric projects. Now, where is the security? Where is the M23? Because this whole minerals deal between the Congo and the U.S., the motivation from the DRC's point of view was to get security and to basically stop this invasion that's going on the eastern side, or civil war, whatever the reality is. And now we're hearing that the minerals deal is getting conflated with the Libido Corridor on the other side of the country. Boulos visited Congo's capital, Kinshasa, to discuss an offer by President Félix Tshisekedi to invest in the country's mining industry in exchange for security assistance in the nation's fight against a rebel group in eastern Congo backed by neighboring Rwanda. He also visited the leaders of Rwanda, Kenya, and Uganda. Quote, the United States will consider all diplomatic and economic tools to advance peace, end quote. Rwanda should seize all military support for M23 and withdraw all troops from Congolese territory, Boulos said, adding that his talks with President Paul Kagame about the conflict in eastern Congo were, quote, very fruitful and productive, end quote. So that was just kind of stuck at the end of the article, interestingly. So what a weird conflation of stories there. Also out of the Congo, we have a headline out of Al Jazeera. The Democratic Republic of Congo suspends ex-President Kabila's party over alleged M23 links. Authorities accuse the 53-year-old politician of high treason over alleged ties to the Rwanda-backed M23 group. So the political party of former president of the DRC, Joseph Kabila, has been suspended, and the seizure of assets and the leader accused of high treason. So more just interesting developments. I'm trying to cram it all in here. We're going to have a couple of more external news stories as we begin with rare earths in the news section. So all sorts of fascinating developments on rare earths and more in our news section coming up. In this week's episode, I'm very pleased to welcome to the show William Sheriff, founder and chair of Encore Energy, back to the program to discuss uranium in the United States and what the situation is from William Sheriff's point of view, as uranium has pulled back. So we get the latest from William Sheriff on the state of uranium in the United States, as well as on this week's Spotlight. I'm very pleased to welcome Candace McGibbon, former CEO of INV Metals and upcoming president of CIM, and she discussed CIM Connect, a conference occurring on May 4th to 7th in Montreal, with all the details coming right up. If you want to find us online, you can find us at northernminer.com. You can find us on X. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Candace McGibbon, former CEO of INV Metals and upcoming president of CIM, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast for the very first time, Candace McGibbon, former CEO of INV Metals and upcoming president of CIM. Candace, welcome to the show.
Thanks, Adrian. It's a pleasure to be here.
It's great to have you, Candace, and congratulations on your upcoming presidency at CIM. And so, for those that are unfamiliar with CIM, it's a bit of an institution here in Canada. What is CIM and what is the organization up to?
Well, thanks for that, Adrian. And I'm thrilled today to talk about what the CIM is and the exciting events upcoming. The CIM is the Canadian Institute of Mining, Metallurgy, and Petroleum. And we just celebrated our 125th year in Canada. And what generally we are is we're a society, a not-for-profit technical society of professionals in the international and Canadian space who are working towards innovation and supporting the global economy with the raw materials we need for development, industry, and ultimately the energy transition.
It's very cool that there is an organization that does both mining, metallurgy, and petroleum. It's kind of unique in that respect, I imagine.
It is unique, and we haven't been as active in the oil and gas space because they do have other organizations. However, as you can appreciate from a mining perspective and from a resource perspective in Canada, we all work together. And so the metallurgy piece of that is how do we extract the ore that we find within the exploration and the metals that we find. And so it's very important. It's very integral and integrated from that perspective as to how we indeed deliver our raw materials and products to market.
Okay, excellent. And as far as the role of the organization, who becomes a member of CIM? Is it mining company people? Who's involved here?
Absolutely. So, look, our membership base is wide, and historically, it has been technical engineers and those types of people, metallurgists that are really in the business of doing the work to make the mining companies extract the resource and to process the resource and to get it to market. And so the technical people come together every year. And one of the things we'll be talking about soon is our annual conference, CIM Connect, which is happening in May. But we come together from a technical perspective to share best practices, or what we call leading practices now, and to discuss the future, innovation, AI, energy transition, critical minerals, et cetera, et cetera. And so we have shied away from, there are other organizations within Canada that would do your typical lobbying and your advocacy. However, CIM is, and one of our strategic pillars is to advocate just from a perspective of each and every member who's working in the industry, to advocate for our industry as we move forward so that we have the ability to do what we do every day.
Okay, excellent. And so you have a conference coming up. I believe you said it was in May. Tell us about the conference. What's going to take place there?
So it's in May. It's in Montreal. It's from the 4th to the 7th. And it's really a wonderful meeting place of professionals and of keynote speakers and of technical sessions, short courses, and we have an expo. And so when you asked about who are members, the members are mining company professionals, explorationists, geologists, metallurgists, engineers. We've got consultants, so those that do PEAs and feasibility studies, all the way through to those that are literally designing the SAG mills and the drill bits that are used in this. And so the expo is also very big, and we call people who wish to find out what's happening real time on the products and exciting things and innovation in the space to come and see for themselves, meet those people who are at those companies who are showing what they do every day.
So, what are some of the bigger themes then that you expect will be discussed at the conference? You mentioned AI. I guess technology would be a big one. Is there anything else? Do wider topics come in, say like the green transition, for example?
Absolutely. So this year's theme is minerals, innovation, and the energy transition. And so there are many high-level talks along with technical talks. And so this is a very extensive conference. So anybody who is joining us, and I suggest that any professional who is even related to mining, this is a conference for you, because the keynote speakers are dealing with this year innovation in AI, the energy transition, financial strategies, and then specific minerals. And so those are real themes for the industry with people who are thought leaders. And then on the other track, we have the technical specific papers on innovation in water management, innovation in tailings management, that type of thing. And so really from soup to nuts, high level, all the way down to what specifically are you dealing with at your company and how can we collaborate on working together in order to solve that technical problem.
Okay, excellent. And as far as technical innovation, I mean, I would imagine AI might be, front and center, but is there something in particular that is really kind of turning a lot of heads and really changing the industry on a technical level?
Well, that's an interesting conversation, and we're going to hear a lot more. And so this is a perfect spot for me to invite anybody and everyone to come to this conference in order to start that conversation and to really share what their companies are doing with AI. But let me give you an example of how AI can really be harnessed in a great way. So exploration results, right? How many companies have meters and meters and meters, hundreds of thousands, millions of meters of drilling? And think about if we could harness the exploration results and all of the characteristics of the rock that we have been able to amass together and have AI come up with models that work as far as what is a deposit, et cetera, et cetera. And so there are definite themes for AI that will become really exciting over the next few years as we look to really focus. Because, Adrian, as you know, we're going to need critical minerals and we need exploration discoveries in order to do that. And so where we look for them, how quickly we're able to identify our drill targets and how quickly we're able to drill those drill targets off means we can get those metals to market for the energy transition. And so all of that exciting things happening in AI within our industry.
I imagine. And, exploration, I just feel is one of those areas that is just waiting for that classic disruption to occur, where all of a sudden, drilling into the ground for tens of thousands of dollars each, drill hole, if we see that getting replaced by very low cost, more effective, ways of scanning what's going on underground, I mean, how that could change the industry. So just kind of highlighting the importance of what might take place here. So as far as the details then, so where is CIM? When is CIM? How do people attend?
Absolutely. And just on your last point there, think about that too when you're at the rock face, when you're mining, right? And when you're dealing with your mine plan, how AI can work with the geologists and the mine planners and the drillers and those that are working. I mean, it really is one of those things that can change and work to efficiencies in our industry, which of course the general public and governments are calling us to do. So it's really exciting. However, the CIM Connect is in Montreal this year. It's May 4th to 7th, and you can go to convention.cim.org and you can register. So you can see all of the information. The program is up, the keynote speakers are up, the expo is up, all of that. And as you were talking about, are there other things? There's women in mining. There's just themes in general that we talk about for diversity, sustainability, the energy transition, that when we get together will be collaborative and exciting in support of our industry, which is so important in this day and age of the uncertainty that we face.
Indeed. And just finally on who attends, who should attend?
This conference is for anyone who is interested in the mining industry. We're looking for technical engineers. We're looking for lawyers who support the industry. We're looking for financiers. We're looking for anyone who is interested in this business internationally within Canada to support the industry and what we need to do to get to that energy transition in a sustainable and responsible manner.
What about students? Should they consider attending CIM?
Absolutely. We have students and we've got programs for students. So I call out all of those who may be in Montreal and or who could get to Montreal. Students are going to be next generation of talent leadership. And in this business, we have seen, and one of the challenges is that we're not replacing the baby boomers who are going to be retiring. And so we are going to have a big push in support of students, and they're welcome. And I personally would love to see and speak to any student who attends. And so hope to see them out.
So this is Montreal, May 4th to 7th, and simply go to convention.cim.org. Candice McGibbon, former CEO of INV Metals and upcoming president of CIM, thank you for joining us and sharing all that you're up to at the conference.
Thank you, Adrian, and I look forward to seeing everyone there.
Thank you to CIM for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit convention.cim.org. Turning to the website, China's export controls are curbing critical mineral shipments to the world. This is Reuters via mining.com. China's export controls on three metals important across the defense and chip sectors are keeping shipments at historically low levels despite high prices worldwide as Beijing flexes its control over the minerals supply chain. China is the world's largest producer of antimony, germanium, and gallium, which have niche but vital roles in clean energy, chip making, and defense. Since 2023, Beijing has gradually added the metals to its export controls list. In December, it banned exports to the United States. For any item on the control list, exporters must apply for licenses, an opaque process which allows Beijing to exert the dominance it has built for years over the mining and processing of important minerals. Fresh customs data released on Sunday reinforced a pattern building since controls were imposed. Exports are down, and some buyers, especially in Europe, are cut out of the supply chain. Exports of antimony and germanium products in the first quarter were down 57% and 39% respectively compared to a year earlier. March exports of gallium hit their lowest levels since October 2023. Quarterly shipments were up on last year, but the current trend is still well below 2022. The last full year before the curbs. Minerals that are exported, in the case of antimony, are going to a smaller set of countries. After a 5-month hiatus, small shipments of antimony were sent to Belgium and Germany in March. But exports were well below historic levels, and former large buyers like the Netherlands haven't received shipments since September. You wonder if they need those for the lithography machines. The pattern across the three metals raises questions about how many export licenses China will approve for the 7 rare earth elements it added to the control list this month, and how fast. Exporters say they expect to wait months for licenses, and even longer if selling to the United States. There have been no antimony exports to the United States since September last year, and none since 2023 for germanium and gallium. Fewer exports from China have left overseas consumers scrambling to source material, pushing prices higher, which in turn has supported prices in China. Chinese spot prices of antimony, for example, have jumped by nearly 2/3 so far this year to a record high of $31,509 a ton on April 18th, LSEG data showed. Now, I brought up the Myanmar situation as a potential hidden cause of this whole policy out of China. And we have a development. This came out April 18th from the South China Morning Post. Myanmar earthquake may have disrupted China's rare earth supplies, analysts say. So I speculated on this last week, on whether the earthquake in Myanmar may have affected the rare earth situation, among other things. And now there's speculation on this. The disaster may have damaged mines and transport routes in Myanmar, which is China's main supplier of rare earth elements, analysts say. As it says here, the deadly earthquake in Myanmar last month may have disrupted production of critical minerals that are normally sold to China, casting further uncertainty over global rare earth supplies at a key juncture for international trade. And don't forget, the Kia rebels, which at one point the United States said was backing, or at least backing rebel groups against the military junta, they took over in October the rare earths mining hub in the northeastern part of the country, which borders with China. So all sorts of vectors affecting this rare earth situation. And here's a quote from Wendong Zhang, assistant professor in applied economics and management at Cornell University. Quote, "This earthquake may once again trigger concerns about the supply of rare earths, further exacerbating price volatility. China will be forced to diversify more." End quote. So interesting there. Now, another development that happened in the last week is MP Materials, a producer of rare earth metals in the United States, halted exports to China. Interestingly, and this is Bloomberg News via mining.com, a U.S. producer of rare earth metals stopped shipments to China after Beijing placed export controls on similar materials crucial for defense and technology manufacturing. MP Materials, which operates a mine and processing facility in California, said Thursday it would halt sales of its rare earth elements to China as part of an effort to reindustrialize the minerals supply chain in the United States. So they do have a processing facility, so it'll be interesting to see if they can manage this. The move follows Chinese restrictions announced earlier this month that are expected to have broad impacts on companies making optical lasers, radar devices, and high-powered magnets used in wind turbines, jet engine coatings, and other advanced technologies. China is the world's dominant supplier of rare earths, while the U.S. produces and refines little of its own. And the company said in a statement, quote, "Selling our valuable critical materials under 125% tariffs is neither commercially rational nor aligned with America's national interest. Manufacturers across critical industries have urgently reached out in search of a secure, resilient source of materials and magnets. We are uniquely positioned to answer that call." End quote. Shares of MP Materials dropped as much as 10% in midday trading in New York. And then we heard from the processor in China in response. This is Reuters via mining.com. Chinese rare earth processor Shenghe sees little impact from halt to U.S. feedstock imports. China's Shanghai Resources said on Sunday the suspension of shipments of rare earth raw concentrate from its U.S. partner will not significantly impact production due to the company's diversified supply chain. MP Materials, which owns the only U.S. rare earths mine, said on Thursday it had stopped shipping the critical minerals to China because of the 125% tariffs Beijing has slapped on U.S. imports in retaliation for U.S. tariffs on Chinese goods imposed by President Donald Trump. While China dominates the refining of rare earths, it imports some concentrate mined elsewhere to feed its processors, including large amounts by MP Materials. Quote, "We have built a diversified supply chain of rare earth raw materials with supply from Sichuan and other countries, as well as monazite used as alternatives," end quote, Shanghai said in a statement. Quote, "The supply contract with MP is still valid," end quote. So not a problem according to China. And here's one more article relating to this. This is Forbes. WDC, Microsoft, and material recyclers recover rare earths from hard drives. Hard disk drives contain valuable materials that are used in their construction and operation. This includes rare earth magnets, magnetics that are used in the rotary actuator that allows the head to write and read information from tracks of data on the disk surfaces. The rare earth elements used in HDDs include neodymium, praseodymium, dysprosium, used because of their unique magnetic properties. So they are starting to recycle. Scrolling down, the 4 companies went through multiple pilots to create a mass production ecosystem at scale for retrieval of rare earths, which was completed in December 2024. Together, the companies transformed close to 50,000 pounds of end-of-life drives, mounting caddies, and other materials into critical, high-value materials, all while significantly reducing environmental impact. The figure below from the white paper on this project shows the acid-free dissolution and recovery of rare earth elements using a copper salt solution. This method is said to be ideal for leaching from low-concentrated rare earth feedstocks, such as from shredded hard drives. The method recovers more than 90% of rare earth elements from the hard drive feedstock to produce a more than 99.5% pure rare earth oxide. Continuing on, Trump orders tariff probe on all U.S. critical mineral imports. So we continue to be at the center of the global news narrative here as an industry. This is Reuters via mining.com. U.S. President Donald Trump on Tuesday ordered a probe into potential new tariffs on all U.S. critical mineral imports, a major escalation in his dispute with global trade partners and an attempt to pressure industry leader China. Trump signed an order directing Commerce Secretary Howard Lutnick to begin a national security review under Section 232 of the Trade Expansion Act of 1962. That is the same law Trump used in his first term to impose 25% global tariffs on steel and aluminum, and one he used in February to launch a probe into potential copper tariffs. Asked for a comment on the order, China's foreign ministry said on Wednesday that, quote, "artificial interference in the supply chain violates the laws of the market economy and international trade rules," end quote. Within 180 days, Lutnick is required to report his findings to the president, including whether to impose tariffs. Were Trump to then impose a tariff on a nation's critical minerals, the rate would supersede the reciprocal tariffs Trump imposed earlier this month, according to the White House. Continuing on, Trump to fast-track permitting for 10 mining projects across the United States. This is Reuters via mining.com. The White House said on Friday that it will fast-track permitting for 10 mining projects across the United States as part of Donald Trump's push to expand critical minerals production. The projects, which would supply copper, antimony, and other minerals, have been granted FAST-41 status, a federal initiative launched in 2015 to streamline approvals of critical infrastructure. The White House said it will add more projects. And as part of that, it looks like the Rio Tinto Resolution copper mine will be included. We have another headline. This is Reuters via mining.com. Trump to approve land swap for Rio Tinto copper mine opposed by Native Americans. The Trump administration said on Thursday it would approve a land swap needed for Rio Tinto and BHP to build one of the world's largest copper mines, despite concerns from Native Americans that it would destroy a site of religious value. The move is likely to escalate tensions between indigenous groups vocal about the need to preserve historical lands and Western governments eager to boost critical minerals production and offset China's sector dominance. So a bit of movement on Resolution copper. Another headline, Ukraine-US makes substantial progress on minerals deal, according to Kiev. So the Ukraine minerals deal continues, and we have a quote from First Deputy Prime Minister Yulia Sviridenko, who said on X, quote, "Our technical teams have worked very thoroughly together on the agreement, and there is significant progress. Our legal staff has adjusted several items within the draft agreement," end quote. And another headline, U.S. antimony restarts Mexico smelter plant after over a year. This is Reuters via mining.com. U.S. antimony reopens a processing facility in Mexico. Another headline, LME approves its first 4 warehouses in Hong Kong. This is Reuters via mining.com. The London Metal Exchange has approved its first 4 licensed warehouse facilities in Hong Kong, it said on Tuesday, but higher costs in the territory could curb growth there. The LME, the world's oldest and largest forum for industrial metals, hopes new warehouses in Hong Kong will boost access to mainland China, the world's top consumer of industrial metals. Approving warehouses in China to store LME-traded metal has been a strategic goal since Hong Kong Exchanges and Clearing bought the LME in 2012. Some LME-registered warehouse firms are, however, skeptical about the commercial appeal of Hong Kong, as the costs of real estate in the territory are high and they would have to charge more for their service than in neighboring locations such as Malaysia and Taiwan. And here is a quote from LME CEO Matthew Chamberlain, who said in a statement, quote, "Hong Kong is now well positioned to further develop as a key global metals hub servicing the region and as a gateway for access to the mainland China market," end quote. So, as I like to say here, London Metal Exchange in name only. It seems that there is just a gradual move, increment by Matthew Chamberlain to move the London Metal Exchange over to China, is what seems to be happening here over the months and even years. We're seeing this kind of slow motion move. Not sure what the UK regulators have to say about that. I mean, do they have a say in this at this point, or have they just simply sold it off in 2012 to Hong Kong Exchanges and Clearing, and that's the end of the story? I don't know. Did they sell it with no stipulations? Let's continue. Ontario promises to cut red tape for critical mining projects. So what we're seeing here is fast-tracking mining projects is becoming a global political issue. The government of Ontario is now looking to develop the Ring of Fire, which has a lot of cobalt in it. As well, here's another story. Politicians aiming to win over mining sector ahead of Australian election. And this is Christy Batten at mining.com. And so it's also becoming an issue in Australia. So very interesting developments here across the world. We're at the center of it all here. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.42%. That is 0.03% higher than last week. So bond yields ticking up a bit on all of this firing of Jerome Powell news. UK 10-year gilt is yielding 4.59%. That is down 0.05% on the week. The Italy 10-year bond is yielding 3.67%. That is down 0.01% on the week. And the German 10-year bond is yielding 2.47%. That is down 0.04% on the week. And the Japanese 10-year bond is yielding 1.31%, and that is down 0.06% on the week. So interestingly, bond yields going lower everywhere except for the United States, and one wonders to oneself. You know, you hear of China making deals with the UK and Europe. Is China diversifying out of the United States and into Europe? I mean, again, you got to put your money somewhere. You can't put it all into gold. So bond yields telling a bit of an interesting story, as are metal prices. Let's turn to precious metals. Gold is trading at $3,480.30 per ounce after breaking $3,500 on the futures market just a couple of hours ago. So $3,480, that is $243 higher than last week. So big move in gold. Silver is trading at $32.80 per ounce. That is 55 cents higher than last week. So I guess the gold-silver ratio must be getting pretty extraordinary at this point. Platinum is trading at $955.10 per ounce. That is $6 higher than last week. And palladium is trading at $950 even. That is $35 lower than last week. So gold stealing the show. Turning to industrial metals, copper is trading at $4.70 per pound. That is 7 cents higher than last week. Iron ore is trading at $100.05 per metric ton. That is 10 cents higher than last week, so basically even on the week. Aluminum is unchanged at $1.08 per pound. Lead is unchanged at 87 cents per pound. Nickel is higher at $7.14 per pound. That is 19 cents higher than last week. Tin is lower at $13.90 per pound. That is 26 cents lower than last week. Cobalt is unchanged at $15.29 per pound. Lithium is slightly lower at $9.72 per kilogram. That is 7 cents lower than last week. Uranium edges slightly higher at $65.05 per pound. That is 65 cents higher than last week. And zinc edges slightly lower at $1.18 per pound. That is 2 cents lower on the week. Zooming out, gold steals the show. Industrial metals trend sideways. And those are your metal prices. Coming up, I'm very pleased to welcome back to the show William Sheriff, founder and executive chairman of Encore Energy. We discuss the state of uranium mining in the United States in terms of financing, in terms of supply, in terms of the business itself from many perspectives. A fascinating interview. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the show William Sheriff, founder and executive chairman of Encore Energy. William, welcome to the show.
Good to be back, Adrian.
Well, I'm thrilled to have you back. I mean, uranium's in an interesting moment right now, particularly in the United States. I mean, you see what's happening with the rare earths in China, with the restrictions. I mean, wasn't it in November, Russia did a, tit for tat kind of banning of uranium exports to the United States? So what I'm hoping is we can get a bit of an update of where we are with uranium in the United States. So big picture, I guess, how are things going in your business?
Well, it's interesting. There are a lot of crosswinds, and I think everyone's been wrong predicting the price for the last 12 months, starting out with Biden's cutting back on the Russian imports, and then Mr. Putin retaliating with the same. You would have thought the impetus for higher prices. There are some waivers for a few of the companies, in particular, some of the enrichment companies and conversion, a couple of the utilities, but still it's a decrease in what was already a tight supply. So to see the spot price go down to $60 and just kind of linger there in the last few months between 60 and 65, it's really, I think, caught most people off guard. Can attribute it to a couple of things. In the big picture, I think there's probably a bit more buying back when it was in the 90s, $80 to $100 range than maybe we expected. Some of the fuel buyers that did anticipate small needs went into the spot market and purchased, I think, a bit early just to make sure it didn't go to 150 when they were needing it. Here again, just pure speculation on my part, but there's been a dearth of activity in the spot market of late other than just traders going back and forth on location swaps primarily. That's where you just don't physically move the uranium from one place to another, but you move receipts. A lot of it coming into the U.S. ahead of the tariffs or expected tariffs. But I think uncertainty may be really driving it between, as you mentioned, the Russian situation and then now the tariff situation. There's a lot of exemptions, a lot of waivers, a lot of fine print that probably hasn't even been printed yet. So there's a lack of clarity, I guess would be the way I would characterize the market. When people are unsure, they tend to not get in there and make transactions. So I think that's got a lot to do with it.
I'm glad you mentioned the tariffs, actually. Is that impacting the uranium market in the United States, as far as you know at this point?
Well, from the U.S. side, any tariff action would probably be a supporting thing for U.S. uranium in terms of the raw material. That being said, it does not look like much of the tariff, at least as envisioned at this point, is going to impact raw uranium or yellow cake to any significant degree. Keeping in mind that really anything that is tariffed would help, because the U.S. is the largest consumer and yet one of the smallest producers. In the U.S., we do have the ability, or that is the resources, to be self-sufficient. So take a number of years to ever get to that point. But, it would be constructive for us U.S. suppliers here to have some tariffs on foreign uranium. But thus far, minimal impact.
Just in terms of the cost of mining uranium these days, and there's different ways of doing it. Of course, you do in situ, which to my understanding isn't exactly mining. But when we look at the gold industry, for example, we hear, all-in sustaining costs of about $1,500 an ounce. Is there kind of a similar number in the uranium industry that's got to be met more or less in order to kind of, have a profitable business?
Well, there is, and here again, what uranium price? Because contracting is still nearly at its high. Cameco came out, I think, 2 months ago and said they were still looking at $70 floors and $130 ceilings on their contracts. And at Encore, we would not disagree with that characterization of the market. So contracting has continued on fairly lively and all, but it's still pegged to the spot prices. And, another foreign enterprise, Lotus, just announced an $80 contract with the U.S. utility. So spot price is a horrible indicator. It's just the only one that's out there for the general public. But, in terms of its real effect, it does have a effect, especially if you're trying to get capital to build a mine. And I think that's where you're really going to see the effect of this price. Our cost last year on our 10K was $40 and X cents. I forget what it was. And so in situ is a fairly economical way to extract uranium. It's much more akin to the oil and gas industry. As you mentioned, it doesn't really look like mining because it's not. We don't move rocks, we move water. So our costs are less, our permitting time is less, our reclamation time is less. So that's how we can compete with the higher grade, conventional mining operations.
Okay, excellent. And when you refer to Cameco saying, say, $70 to $130, is one like the long-term contract? Like, in a sense, does it get more expensive the further you go out because people
Well,
anticipate a shortage, or is it the opposite?
no, it's actually not that way at all. When you talk about floors and ceilings, which are the dominant contracts that are out there now, recent years, that's certainly been the trend. The floor price is just exactly what it appears, $70, regardless of the spot price. And the most that they'll pay is the 130, that being the ceiling. So if uranium's 150, they're still only going to pay you 130. Conversely, if uranium's 50, they're still going to pay you 70. And those floors and ceilings are ratcheted up depending upon the contract and the individual terms of that contract on a yearly basis, every 12 months, depending upon one or more inflation indicators. We tend to, in our contracts, look for a basket, which would combine CPI, PPI, and GDP. GDP, of course, is the favorite for the utility industry. They like using that one, but it doesn't necessarily give you a good indication as to inflation necessarily. So we like to put a number of different indicators in that basket. And then whether it's triggered in the first 12 months of the contract or, if your contract's for delivering the 2030s or out years, when does that inflation kick in or that adjustment to your floors and ceilings? So we like to try and get them to kick in, in the first 12 months to start doing an annual, incremental increase in those, which can certainly add up over 4 or 5 years.
It is quite a range, isn't it? Now, I'm just kind of curious as well, kind of a layman's question here. When you extract uranium in situ, is it better to give it to certain uses over others? Say, like maybe it works better with a nuclear reactor for some reason, or does it all end up in the same result as if you were to, mine it out of the ground?
No, it's all the same end product. And, and then it all goes to the same conversion facility where they take the raw material and turn it into a gas. And then it all goes to the same enrichment factory and where they enrich it up to whatever grade of U-235, that being the fissionable part of uranium, the isotope that's fissionable. Starts out at 0.7% in the ground, 0.711, and then to get it to operate in most conventional reactors, you need 5% enrichment. To get it to operate in most of the newly conceived small modular reactors, you need it up to about 19.75%. Then, of course, for military uses, you need it up in the 90-95% range. All the same commodity, it's just the level of enrichment or refinement might be another way you'd look at it. It literally involves separating the U-235 atoms from the U-238.
In terms of the uses, then, is it still primarily, nuclear reactors, the primary, and maybe military, as you say, secondary? But what are the primary uses
Oh,
that you
yeah.
deliver
Yeah.
uranium for?
Well, we deliver exclusively to nuclear utilities in the U.S. We do have one legacy contract that's with a trading firm, one that the firm inherited many years ago. 100% of our product goes to the U.S. nuclear utilities, and most of the uranium that gets produced will be flagged with its country of origin. Sometimes when it changes countries to get converted or enriched, it'll be reflagged with the country that provides that service. And then, of course, you have another restriction on whether or not it can be used for military purposes or not. But all of ours goes into the nuclear utilities for generation of electricity.
Okay, excellent. And in terms of where it gets sent, I mean, do you keep it all domestic, basically?
We do. The U.S. is the biggest consumer, and Last year, we were the biggest producer in the U.S. Not that that's a lot. We've still got a lot of growth ahead. And, the whole industry does. As an industry, we're producing just over 2% of our needs in the U.S. So there's a lot of room for growth internally.
Right. And that's where I wanted to go next is supply. Oftentimes you'll hear, say, analysts of uranium, when they talk about it, it sounds like a fairly dire situation. I mean, how would you characterize it? Like, where are we in terms of, in the United States, supplying the domestic needs? I mean, you mentioned 2%, but is there a lot in the pipeline and it doesn't seem that bad? Is it dire? I mean, how would you characterize it?
Well, uranium's not rare. It's the eighth most abundant element on the planet. Problem is finding it in suitable quantities to where you can make a buck to extract it, and also in a jurisdiction that, allows for responsible extraction. I think in terms of the shortage that's developing, and all you've got to really look at the huge impact that AI is going to take in terms of consumption. That's why we've seen the, really heretofore not seen investments by companies such as Microsoft, a number of the different high-tech, Oracle, Apple. A lot of these guys are putting incredible numbers of billions of dollars into the industry, which we've never seen before. And up until this time, it's largely been rate-based compensation to the people who build nuclear power plants, which in itself causes some issues because you can only burden so much of that on your electrical customers. So it's certainly throttled growth in the industry. But I think you're going to see some profound changes over the next, the general projection is the next 1 to 5 years, we'll see severe constraints. I think it's all dependent upon the small modular reactor as well as the conventional reactor build out. These things just take a little more time than most people think. So I think that's another contributing factor to the lull in uranium prices as this build out has not really progressed much more than talk in the last year. But these things take a lot of time to get through permitting. I think it's coming. It's inevitable. The one thing that I would say is predicting the future is easy. Predicting when is very difficult. And that's what we're looking at, but certainly going to cause a shortage. And in the U.S., we're probably more vulnerable than anybody else just because we get, roughly half of our uranium from Canada and Australia, which obviously are very secure, friendly areas, but the rest of it comes from elsewhere. And elsewhere consists of Namibia, which just this last week had invited the Russians down to help them with their uranium. Obviously, that's going to come at a cost. They're trying to build out their fuel cycle where they can do their own conversion and enrichment. And I'm sure the Russians will be glad to help them, but probably not if they're going to be sending their uranium or final products to the West. Similarly, Niger, which was formerly under French control, was a supplier to the West, is a big question mark after earlier last year, actually 24. Then you've still got the 800-pound gorilla of Russia with 45% of the world's enrichment capacity. That's certainly not coming this direction. And just a little over a month ago, you had Kazakhstan, the world's largest supplier of raw uranium, say that they're not going to allow any foreign investors over 10% of any of their assets, which mean that most of that's going to the east and not going to the west. So there's a classic situation of where the U.S. doesn't plan very well at all for the future, but fortunately, they make up for it by reacting quite well once there's a problem. So I don't see us breaking the mold on that. There's a fledgling handful of companies that are producing in the U.S. Certainly, I think you'll see that number grow initially, and then through consolidation, probably come back to 2 or 3 major producers in the U.S., but substantially larger than they are now.
I've quoted you many times this notion that the West is slow to anticipate things, but great at reacting. I thought that was such a great insight from our last discussion. Now, on that point, we see a pretty intense focus in the United States on minerals and mining for people who have been in the industry almost to a shocking degree. How do you feel from, I guess, the uranium industry's perspective that, say, the U.S. government is doing? Like, do you think they're doing everything they should be doing? Is there more that they should be doing that they might not realize? How would you assess their performance in terms of uranium?
Well, we're early. The Biden administration did put a couple of billion into enrichment, which is our biggest weakness. The bottlenecks in the entire process are conversion to a degree, and then to a much greater degree, the enrichment, which, as I mentioned, Russia has the share of that in the world. So we've really got to see significantly more than 2 or 3 billion going into bring up enrichment in the U.S. And I think we'll see that more specifically with the current administration. They're saying all the right things, going through all the right preparatory measures. Now let's just see some execution on that. I think we'll be in really good shape. But it's a matter of taking those plans and taking those ideas that they've got and moving them forward. The industry really doesn't need, in terms of the raw materials, the yellow cake end of it, what we're in. we don't really need any helping hand from the government. We just need them to get out of our way in terms of regulatory hurdles. Not that you don't want to go through a certain amount of necessary regulations and review to make sure you've got a safe project, but in terms of in situ versus the conventional mining, that's a much smaller hurdle. And as such, we should be able to get some sort of standardized regulation to be able to get projects off the ground and into production within 2 or 3 years, as opposed to what can now take 15 or 20 under the federal regime. Of course, there are a few states that are agreement states that actually administer the federal rule book themselves and are much quicker. They do it typically 3-year time frames, that being Wyoming and Texas. But there should be some national reform to where that's the standard across the nation. And that would greatly assist the in situ end of the business.
Okay, great. And so would it be fair then to characterize a lot of the bottlenecks, so to speak, or of, bringing the industry to where it needs to be as basically a permitting issue, so to speak?
Well, yeah, bureaucratic regulatory red tape. It's just a classic case. The feds administer rules the same as the agreement states do, out of the same book, same regulations, yet somehow the states have enough economic incentive to get these operations on their tax rolls and provide economic benefit. Aside from the needed uranium in 2.5 to 3 years, where it takes the feds 10, 15, who knows how long. There is no definitive timeline dealing with the feds. And that's where we really need to see that reform. If the states can do it and demonstrate it in a very safe way with good reclamation, using the same rule book as the feds, there's absolutely no reason the feds can't shorten that timeline to 2 to 3 years with certainty, as opposed to 12 to 15 without certainty.
I don't know if you've been following the Canadian election, but it's quite interesting. The very issue that you're bringing up is becoming a campaign issue, which is to streamline the permitting process to basically one level of government and to shorten it. Because as everybody in the industry has been saying, if you're going to take 15 years to put a mine together, it's going to take us a while to get what we need. So you're basically saying there's kind of an analogous situation in the US. Have you been paying attention at all in Canada?
I have not only paid attention to it, I lived through it. Having tried to operate a gold mine in the Yukon, quite frankly, it's an answer to a Jeopardy question. When is a permit not a permit? The answer is when it's in the Yukon. It's just on and on and on with permitting. And even when we had our permit to mine, we were told we couldn't mine. So, your big problem with that 15-year timeline is who on earth is going to finance it? The answer is nobody. Capital is highly mobile. It will go to places where it can have regulatory certainty within a time frame that they can value the investment. But when you start looking at your return on investment over a 15 or 20-year time frame of just getting to where you can turn the dirt to build a facility, then all your economic returns are gone.
And in terms of financing, then, how is the uranium industry doing? I assume it's doing better than, say, a lot of the, gold and silver exploration companies, which maybe is starting to improve with this big move in the gold price. But the last few years, it's been pretty bleak. How is the uranium industry in terms of financing?
Well, uranium industry, here again, spot being a horrible indicator, but the only one we've got. When spot was doing very well, there was a lot of interest coming in, a lot of financial backing coming in. We were very fortunate to get into production early and quickly because we had plants that simply need to be renovated. I think our timing on permitting in Texas was 17 months on the first one and 20 on the second, or I may have them backwards, but certainly under 2 years on both of them, which is a timeline companies can deal with. But the funding certainly is still there, but it's dried up a little bit, certainly slowed down, especially for the larger cap traditional mining projects. Conventional mining projects, whether it's copper, gold, or uranium, are still pretty capital intensive. And, at $60 spot uranium, there are an awful lot of projects that, have a break even around 50 or 55. Well, there's certainly not enough margin there to get those things funded in the current environment.
Very interesting. And of course, you're with Encore Energy. So you produce uranium currently, right? Like you were saying,
That's right.
provide to the nuclear utilities. I mean, what are you providing? And tell us a little bit about Encore. How big of a deal is Encore right now relatively to the rest of the industry, say in the United States?
Well, in the U.S. last year, we produced more uranium than our nearest competitor. That being said, it wasn't nearly enough. I think we produced just under 300,000 pounds. And number two producer was, I think, maybe 5 or 10,000 pounds below us. So it was blue ribbon, but it wasn't very far off to the red ribbon. But we've certainly got to get up there around the 1 million pound a year production. And ultimately, I think through mergers and acquisitions, you'll probably see 2 or 3 companies that are 5 million pound a year producers being the status quo a few years down the road here. So we've got a ways to go. The industry certainly has a ways to go.
And just as we start to wrap up here, does the government reach out to you at all? Like, I imagine you have meetings with government officials.
We certainly lobby them. Yeah, we lobby them. I mean, they don't necessarily reach out. They know where we are. The biggest reach out's actually been under the Trump administration recently when they've got a critical minerals assessment on federal lands throughout the western U.S. And as a result of one of President Trump's executive orders, they've compiled a list of projects that are on federal lands where they actually have most of the jurisdiction, if not all of it, and what they can do to speed up development of those resources. So here again, they're saying all the right things. They're doing all the right preparatory things. Let's just see how we go in terms of actually seeing that materialize. And we're quite optimistic that we will. A number of years off of the timeline on these things that will improve the financing visibility and really, help the country out in terms of getting more domestically produced uranium. So we're in touch with them more than they're in touch with us. But fair statement that they know where we are and what we've got going and what we need.
Okay, excellent. And just the last couple of questions here, William. Where is Encore Energy going then? Like, how do you see things, in a sense, playing out for the company? Are you guys trying to grow? Are you trying to consolidate what you have and make it even better? How is the company approaching these coming years as there is going to be this need for uranium?
Well, we clearly plan long term and have a pipeline of projects that we look towards getting into production as permitting comes along. We do have 2 of them underway now in terms of production. We weren't happy with our production last year, even though it was leading the pack. We still weren't happy with it. We can make a lot of internal efficiency changes, which we're headlong into, and started a new program here just over a month ago with a change in management. We're definitely ramping things up here and follow our press releases that'll give you a good indication, but there were a lot of internal changes we could make. We had a dash to the production line, which we thought was important, and we certainly overachieved on that. But in terms of day-to-day operation, there were a number of things we have undertaken to streamline that and get a greater productivity out of what we're doing. Beyond that, the company's obviously lived a lot through M&A activity, this company and the predecessor company, Energy Metals, going back to the 04 to 08 timeframe. And I think you're going to see M&A increase, if anything. So whether we'll end up being the acquirer or the acquiree, we'll see. And, it all depends upon finding 2 willing parties and carefully evaluating the condition where 1 and 1 equals 3 or 4. But certainly, I think you'll see more and more of that coming along, especially between the companies that are in production or very close to production.
Okay, excellent. And just jumping back quickly to the SMRs, have they rolled out at all, or is this still in the wings, these small modular reactors?
Well, I think, probably the one Bill Gates is working at Kremer in Wyoming is probably one of the leading candidates. And I think we'll see something in the next couple of years. One of the big hangups now is the fuel. There are a certain class of these SMRs that are simply scaled down big reactors, like the AP300 reactors, just a smaller version of the AP1000. And it can use conventional fuel. Problem with conventional fuel is you have to replace it fairly often, every year or 2 or 3. You need to change a few of your rods. Proportion of your rods. Compare that to the HALEU, the high-assay low-enrichment uranium, which will be used for these SMRs, where they're basically contained units and they'll operate for a number of years without any change in fuel. And to get the HALEU fuel right now, you have to go to China, Russia, or Iran. What could possibly go wrong with those sources? So we really do need to, and there is an impetus to get Centrus, the one enrichment company in the U.S., to produce HALEU, but that's going to take a number of years.
Thank you once again to CIM for sponsoring this week's episode of the Northern Miner Podcast, and thank you also to William Sheriff for appearing as this week's featured guest. And thank you, dear listener, for continuing to support this broadcast. If you'd like to help out the program, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.